Hey guys, this is Make Dollars and Cents, and today we're going to talk about the stock market, give you a little introduction to what it is going on right now and why the markets are all over the news, and then run through some simple technical analysis, which means looking at charts and seeing where we are at the moment. So let's dive in. Fundamentally, what the stock market is a global network of people and companies looking to exchange interests in businesses, and it is kind of like a farmer's market, but instead of people buying and selling pickles, they're selling an economic interest in a business. This is also called equity, and it's just a small chunk of ownership in the business. So if you own a stock, you own a portion of the business. You can see in this stock market heat map here which businesses are on the menu, and you can buy a piece of any one of these Monday through Friday, 9:30 a.m. to 4 p.m. It's pretty obvious by the color that over the past month or so, if we switch it over to the month, there has been a general decline in all of these stocks here. Which brings most people to the next question: why do stocks go up and down? So we'll head over to the chart. We'll open up the S&P 500, the 500 largest stocks in the U.S., and we'll say, why do they fluctuate so much? Why are they going down right now? If investors think that business is going to churn out less cash, less profit, they would not be as excited to own the stock. It lessens demand, leading to lower price, supply and demand. On the flip side of that, if the outlook is bright and hunky-dory, investors would look favorably on the business and want to buy more of it, increasing demand, leading to a higher price. We saw that happening generally over the past few years. So from this year's 2018, with a few hiccups here and there, we saw some declines. This was end of 2018, early 2019, and then we picked up the pace again and started heading higher. And now we're seeing some more turbulence due to this pandemic outbreak. If I open up this chart for United Airlines, you can kind of see that dynamic happening as well. This is one stock that's been specifically hit hard during this pandemic. So you can see back in January, like I said, things were going well. People were flying around. The economy was chugging along. The news of this pandemic broke, shutting down the movement of people almost completely. What do you think that's going to do for the business outlook and profits in the near future? Bring them probably pretty close to zero. And look what happened to United stock. It went from up at 80 down to pretty close to zero, down to lows of looks like 18. Now we're back at 33 on optimism of a bailout of some sort or something. But certainly this is going to negatively impact business, meaning less people want to own the stock, meaning less demand overall, ultimately a lower stock price. And this begs the question, obviously, when is a stock price too low or too high, right? So you could have made the argument that here, when the stock was at 94-ish, it was too high. You could make the argument here at 17, 18 that it's too low. Well, there are a few ways to measure how overbought or oversold a stock is. Overbought meaning that investors may be too excited and that the price is ripe to fall. Oversold meaning that investors may be too pessimistic here and the stock is trading at a bargain. One way to gauge this is to look at support and resistance levels, which are a way to measure whether a stock is overbought or oversold by looking at previous price patterns. So basically, look at the chart. Here, I'll use United again, and we just look at it. We're looking for price levels that the stock couldn't break above or below after testing them a few times. So, for example, we see here, United has tested this band between 77 and 80 around 5-6 times. So 1, 2, 3, 4, count these 5, 6. Also count this here at 7. And ultimately, this was a failure, right? We can see that this final time, it broke below that key level and just capitulated. So this is the market saying, hey, this support level has worked in the past, and it doesn't seem to be working now, so let's get the heck out of here, and the stock price just crumbles really quickly. The same can be said for the top of the United range, so all the way up here. Right here around 95, looks like 95-ish to 98-ish. It looks like the stock tested this price level 3 times and never broke above it. So as a trader, you look at this and you go, okay, when the stock comes down near 80, I'm going to buy the stock, and I'll look to sell it when it gets up to 95. And obviously this is a simplified example, but the concept of support and resistance is an important one to understand if you're going to be trading in the stock market. United is just one stock, and there are thousands, and it just so happens to have been hit quite hard by this whole pandemic. Taking another one, Walmart. So Walmart, WMT, is doing just fine. Their stock price has been relatively stable. Walmart is a big box store, and unless you were living under a rock for the past couple of weeks, you can see people are running out and buying toilet paper and Clorox by the cartful. So who just so happens to benefit when things like this happen and people buy things in bulk? Walmart does. And you can see that reflected in the stock price. So people are spending less time on airplanes and more time in Walmart, and that's reflected. It's not a foolproof way of looking at things, but a little bit of intuition can go a long way when investing. And this idea of businesses being some being more risky versus others being more stable is broken down into an overarching theme in the stock market called the sectors. And I'll click over the sectors, and you can see there are a few of them. So now we have 11. Real estate was recently added a few years ago. Real estate used to be baked into the financial sector, but they broke it out after the financial crisis happened. You can see just by studying this for a few moments, you can again intuitively think about which ones would be the safest during a downturn like we are seeing now. So Walmart would be a more defensive pick as a consumer staple. People need to eat, buy necessities, cleaning supplies, etc. This means Walmart's revenue is pretty safe. Even during times of distress like we're in right now with this pandemic, it will never have explosive growth like some tech companies you might have heard of, but it is a reliable business to own. I'll leave this in the description below if you'd like to take a closer look at it in a little bit. Another concept that a lot of people seem to ask about is long-term investing for retirement. The most common question is, how do I set up a 401k with my company? Or if I did set up a 401k with my company, then what do I buy? And if you want to be a hardcore analyst, we can look at the support and the resistance lines, forecasted profit estimates and stuff like that. You can certainly do that, and I will continue to make videos about those types of things. However, if you're looking for something a little more hands-off, you'd probably want to invest in index funds. I'll pull up an ETF index fund here. This is the SPDR, SPY 500 ETF Trust. And so what is an index fund? It's basically just a way to invest where you don't have to pick any individual stocks. Again, I have a lot of videos to make, and this one deserves its own separate video. But at a high level, an index fund is an investment whose value is tied to a basket of other investments. So here you see this is an investment in the S&P 500. So let's break that down. What's in the S&P 500? We'll go to the S&P 500 map, and we'll look. You'd be buying a piece in all of these businesses here. This is a picture of the S&P 500, the largest 500 stocks in the U.S., with some restrictions, say profitability restrictions over the past 3 months. Some are down, some are up. If you don't have the time or don't care to pick stocks individually, you can buy a product like this that tracks the value of all these stocks, and generally over the long haul tend to go up in value. They drift up. So in one fell swoop, you can own a piece of all 500 of these businesses by buying one ETF, SPY. So if you're looking at investing through a 401k, see if your provider offers something like this by checking their investment options for something along the lines of S&P 500 index fund. Right now, this would probably be a pretty good time to start investing as stocks are relatively low, as we mentioned in our previous video. And by relatively, I mean that stocks are lower than they were a few months ago. So by entering at this lower price, you have a higher probability of making a good investment. That's not foolproof. So we could go down another 20% like I said. Looks like we're starting to bounce a little bit from the time that I made the last video. Like I said, probability of making money from here is higher from making money up here. And I like how Omar Morales put it on Twitter. He has some great content on his account, so check him out if you're on Twitter. He sees that Daniela is not really, he doesn't understand what kind of opportunity that the market being low presents to her. And Omar very succinctly mentions that when stocks are high, your weekly contribution to your 401k or IRA is buying into those stocks when they're at their most expensive. Because of what we are going through with this pandemic, stocks are lower. Would you rather your 401k pay $190 per share for Microsoft or get a better deal at $140? Buy low, sell high. That is the name of the game here, and I like how Omar put it in his tweet. Drop by, give him a follow, let him know that Make Dollars and Cents sent you. Let me make sure that I mention here that nothing here is financial advice or affiliated with any financial company. It's not a solicitation to buy or sell. I also have a disclaimer on my website here, so please do check that out. And I hope you enjoyed my video and learned something again. If you did, let me know in the comment section below and leave a like to help out with the YouTube algorithm. I'd really appreciate that. Also consider subscribing for more content like this in the future. I do hope to be posting more regularly here from now on. So yeah, please do subscribe if you can. Check out our website at makedollarsandcents.com for more written content if you're into that sort of thing. I actually just updated some older blog posts with more relevant info this week, so check those out. So thanks for watching, and I'll talk to you guys soon. Bye.